You know, I get asked all the time, what's the secret? They want a complicated formula, a magic key to unlock the market. Well, I'm here to tell you, it's not about being the smartest person in the room. It's about being rational when everyone else is letting their amygdala do the driving. Let's talk about a few lessons, not just for investors, but for anyone running a business or, frankly, running their life. First, the circle of competence. The size of the circle is not what's important. Knowing its boundaries is. I don't understand what crypto does or won't do in 10 years, so I steer clear. It's that simple. I stick to what I know: insurance, railroads, soft drinks, businesses that are simple, predictable, and have a durable competitive advantage, a wide moat. Are you investing in or managing something you truly understand? Or are you just following the herd into the latest fad? If you can't explain the business to a 10-year-old, you probably shouldn't own it. Second, price is what you pay, value is what you get. This is the heart of it. The market is there to serve you, not to instruct you. Its job is to offer you prices. Your job is to decide if they're a bargain. Sometimes Mr. Market is euphoric and will offer you a fantastic price to sell. Other days, he's morbidly depressed and will offer you a screaming deal to buy. The foolish investor lets Mr. Market's mood swings dictate their own actions. The smart one just takes advantage of them. In management, it's the same. Don't overpay for an acquisition just because everyone else is. Wait for the right price for the right asset. Third, be fearful when others are greedy, and greedy when others are fearful. This is how you put that second lesson into practice. It sounds easy. It is not. It requires a temperament that is divorced from the crowd. When the headlines are screaming that stocks are going to the moon, and your barber is giving you stock tips, that's the time to be cautious. When the headlines are full of doom and gloom, and it feels like the world might end, that's often the time to look for opportunities. Panic is the enemy of the speculator, but it is the ally of the investor. Fourth, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. I learned this the hard way from my partner Charlie. You can find a statistically cheap stock, but if the business is poor, it will likely stay cheap. Or get cheaper, but a truly extraordinary business, one that grows its intrinsic value year after year, will eventually pull its stock price up with it, even if you paid a little more upfront. As a manager, your goal is to build that wonderful company. Focus on creating long-term value, not on hitting quarterly earnings targets for Wall Street. And finally, the most important investment you can make is in yourself. Your own abilities are your main asset. You can't be taxed on them, and inflation can't take them from you. The more you learn, the wider your circle of competence becomes. Read every day. Develop a mindset of continuous learning. Nobody will ever care more about your financial well-being than you. So arm yourself with knowledge. There's no magic, just discipline, patience, and a willingness to think for yourself. The unshakable circle. Know your boundaries. You don't have to be an expert on every company out there. What you must be is brutally honest with yourself about what you truly understand, and more importantly, what you don't. I call this your circle of competence. The size of that circle isn't the critical thing. Knowing where the perimeter is drawn is everything. The world is full of people who are experts in a very narrow field, and they do extraordinarily well by simply staying within it. The problems start when you wander outside that circle, because you hear a tip or see a stock price moving, and you feel the fear of missing out. That's when you're playing a game others understand better than you. If I can't look at a business and, with a reasonable degree of certainty, visualize where it will be in 10 or 15 years, I just don't go there. It doesn't matter how exciting the story is. There are no cold strikes in this business. You can watch pitches that look enticing but are outside your zone go by all day long, and you'll never be penalized for it. The penalty comes from swinging at a bad pitch. from investing in a business you don't understand because someone else said it was a sure thing. Your goal isn't to act on every opportunity, it's to act decisively on the rare opportunities that fall squarely within your circle, where you have a genuine edge. That's how you avoid the big mistakes, and in investing and in business, avoiding the big mistakes is half the battle won. Mr. Market is your servant, not your master. You have a hypothetical business partner called Mr. Market. He's a fellow of manic, depressive tendencies. Every day, he shows up at your door and offers to either buy your interest in the business or sell you his at a certain price. His emotions are so volatile that his are often completely unhinged from the reality of the business's true value. Some days he's euphoric and offers you a high price. Other days he's utterly despairing and will practically give you his share for nothing. The foolish investor gets swept up in Mr. Market's emotional whirlwind. They buy when he's giddy because they get greedy, and they sell when he's depressed because they get scared. They let this manic fellow become their master. Your job is the opposite. You must see him for what he is, a servant there to offer you prices, not to impart wisdom. Your duty is to evaluate the value of the business independently. Then when Mr. Market is irrationally gloomy and offers you a price far below that value, that's your signal to be greedy and buy. When he's deliriously happy and offers a ridiculous price, that's your chance to sell to him. The market is a pendulum that forever swings between unsustainable optimism and unjustified pessimism. The intelligent investor is the one who is fed by this volatility, not the one who is consumed by it. Invert your instincts, be greedy when others are fearful. The crowd is usually wrong at the extremes. It's built into human nature to seek safety in numbers and to extrapolate the current trend indefinitely. When things are good, people assume they'll stay good forever and they become greedy, pushing prices to unsustainable levels. When trouble hits, they assume the decline will never end and they become fearful, dumping wonderful assets at fire, sale prices. Your greatest opportunities will be born from these moments of extreme fear. It's counterintuitive, which is why so few people can do it. Buying when the news is terrible and the outlook seems bleak requires a steadfast conviction in your own analysis and a temperament that is immune to panic. It requires you to understand that a great business isn't made permanently impaired by a bad economic cycle or a negative headline. In fact, that's often when it's strongest, as weaker competitors fall away. The key is to have the cash and the courage to act when those moments arrive. This doesn't mean catching a falling knife. It means recognizing that the same quality businesses you were happy to buy at a fair price are now being offered at a wonderful price simply because the crowd is scared. The time for caution is when everyone else is throwing caution to the wind. The time for action is when everyone else is frozen in fear. The quality imperative, wonderful vs. cheap. It's tempting to always hunt for the biggest bargain. But time is the friend of the wonderful business and the enemy of the mediocre one. I'd much rather pay a fair price for a magnificent, durable business than a rock bottom price for a so company that's going to face endless challenges. A wonderful business is one with a wide economic moat, a sustainable competitive advantage that protects it from competitors, like a strong brand identity, a low-cost structure, or a regulatory license. A business like that can withstand mishaps, poor management, and economic storms. Over time, its intrinsic value keeps growing, and the stock price eventually will follow that value upward. If you overpay a little for a business like that, the sheer power of its growth will bail you out. A fair company, however, even if you buy it cheap, is a value trap. It has no moat. It's constantly fighting off competition, its margins are thin, and it requires constant capital investment just to stay alive. It might look statistically cheap, but it's likely to stay cheap or get cheaper because the business itself isn't creating much value. Your goal as an investor is to find businesses so good they can be run by idiots, because someday they probably will be. You want a royalty on the growth of the American economy, not a job as the manager of a struggling enterprise. Your greatest asset is yourself. The best investment you will ever make is not in a stock or a bond. It's in your own mind. Your own abilities are your main asset. Nobody can take them away from you, and they travel with you everywhere. Inflation can't diminish their value, and in fact, the more you develop them, the more they compound. The world isn't going to care for your financial well-being more than you will. So you have an absolute obligation to yourself to become a rational, thinking investor. That means reading constantly. You don't need a high IQ for this game. What you need is a stable temperament and a framework for making decisions. You build that framework by absorbing knowledge, not just about accounting and finance, but about how industries work, how businesses compete, and how human behavior drives markets. Develop the communication skills to articulate your ideas, hone your critical thinking to separate sense from nonsense. This isn't a one-time purchase, it's a continuous process of self-improvement. The beauty of this investment is its compounding nature. The more you learn, the better you get at learning, and the wider your circle of competence becomes. It's the one investment that guarantees a return and forms the foundation for every other smart decision you make.